And on the XAUUSD, we I remember during the live session yesterday, we had a sell position triggered where we said a retest of that structure will definitely welcome additional position to our existing trade. Now let's quickly run through this current structure. Now, since the beginning of the week, we saw our price was caught within the channel that is between the 1,857 level and the 1,850 area. And this was an indecision in this market, obviously. And we were looking forward to either a breakout of the channel for buy opportunity or a breakdown of the 1,850 for selling opportunities. Now, look at what happened here. We saw the breakdown. If you had missed this one, price action actually came back to do a retest of structure. In fact, we had multiple retests of the structure, which lasted about 6 to 7 hours before price action dropped to the downside. So you must have had two positions running at the breakdown retest of the 1,850 as price action continued to drop to the downside. And if you remember what I said, if you recall vividly what I said about the 1,845 level here, I told you that as soon as price gets into the structure or tests the structure, we want to be moving our stop loss accordingly to secure the current sell position, as we want to see how price action will be reacting to the 1,845 level to decide if we are going to be buying or selling the XAUUSD. And to further understand the importance of the neckline area at the 1,845, it is very, very important that I scale up into the higher time frame where the importance of the 1,845 level will be very, very clear. Now, on the 4 hours time frame here, it's quite obvious that we realize that price action has been bearish on this chart. As you can see, throughout the course of last month's trading session, price action had continued to find lower lows and lower highs to further emphasize the strength of the sellers in this particular market. However, something interesting happened during in the last 3 weeks in this market, and we were able to connect the series of lower highs here to give us this bearish trend line. In fact, we have a couple of trend lines here. We have the first one here, which is the major one, and we also have another one here which was broken last week, which triggered our buy position last week here, which gave us about 7,000 pips in profit. Now, we took into consideration the situation as price action remained above this demand zone. This was where the new year started. Price action came back into that structure, and we have been witnessing buy pressure around this area in the last 3 to 4 weeks now. And if we take a technical dissection of the structure that price action evolved into within that channel, you will see that we have an inverse head and shoulder pattern. We have the left shoulder, the head, and then we have the right shoulder here with a neckline at the 1,845. Now, that is where the importance of the 1,845 came in yesterday, as it serves as the neckline of that reversal pattern here. Then we saw the breakout of the neckline area during the course of last week's trading session to further confirm that the reversal pattern might be valid. Now, with the situation of things right now, I told you yesterday that if we join the sell momentum yesterday, that we want to be moving our stop loss accordingly as soon as price gets into the 1,845 level, as if buy pressure resumes there, we might likely be seeing another wave of bullish momentum. And if it so happens that price action breaks down that structure, we shall be getting ready to join a decline, as price action will definitely be below the bearish trend line that we identified earlier. As you can see, that's the bearish trend line here. So we were at a critical point yesterday if price action comes into the 1,845. Now, when we scale down to the 1 hour time frame, we want to see how participant in this market has been reacting to that 1,845 level. Now, look at the situation we have here. Let me zoom in so that we can see things more clearly. So as soon as price got into the 1,845 level here during the early hours of today, we saw sharp rejection. We saw buy pressure here, taking us out of the sell position that we had yesterday. And we had a situation where price came back up into the 1,848 level. Now, at this morning, I shared this on my public platform. We had a buy position triggered here, and it appears that price action has broken down that neckline area at the 1,845 and this might likely negate any bullish momentum in this market. Now, for those who are taking advantage of this move here, well done to you for being on standby to catch that move. Let's see how far this bearish move is going to go. Now, in order to make things a little bit simple for us to be able to maintain our trading activity on a clear note for today, I want us to be connecting the series of lower highs here. As you can see, since the beginning of this week, price action has been bearish. So we want to be connecting the series of lower highs here. So I will rather use this one, after which I will be doing some readjustments when we bring back our candle chart back on the screen. Okay, so let's see how I'm going to use this. We are going to see which one we are going to be using. So let's bring back our candle chart. Beautiful. So we have something like this to guide our trading activity for today. So we have let's bolden this a little bit so that it would emphasize the importance of this current trend line here. So as you can see, since the beginning of the week, price action has continued to respect that trend line, finding uniform lower heights, and we have the bearish trend line figured out now. So now with the breakdown of the 1845 level, this further confirms the strength of the sellers at this particular point in time. So we want to see, okay, for those who are taking advantage of this, kudos to you. You want to have your stop loss somewhere right above the trend line here to give some room for price action to breed. And there's still a tendency that we might see a situation where price will come back to do a retest of structure. It could be the retest of the 1845 or the retest of the 1848 level, which also shares a confluence with that bearish trend line to incite another wave of bearish momentum to the downside. So what this simply means is that for those who had missed out on this bearish opportunity that broke down the 1845 level, let's remain patient, as we might likely see price action do a retracement. So we don't know how far the retracement is going to go. Is it going to go into the 1845 before another wave of bearish momentum happens, or will it go into the 1848 level, which shares a confluence with the bearish trend line, before another wave of bearish momentum happens? But one thing we are going to be looking forward to confirm that the retracement has culminated at any structure is to look out for selling pressure. So when you scale down to your lower time frame, you start seeing price action rejecting a structure, probably evolving into a reversal pattern, then we want to be joining that decline to the downside. And if it happens around here, then we want to be joining as well to the downside. So let's this bearish trend line be our yardstick for trading activity for today. So the bearish trend line here and the $1,848.50 level will be our yardstick for trading activity for today. Now, if price continues to trade below the structure, we shall feel comfortable in our sell position. Now, if price action takes us out of our sell position in such a way that it breaks out of both the trend line and the $1,848.50 level, then this will be a beautiful signal that buyers are gradually coming in. And remember that we have the neckline of our reversal pattern on the 4 hours time frame here, which means if buy pressure resumes above that structure, we will be getting ready to join a bullish momentum here. So to further confirm that bullish momentum, we want to see price action break out of the $1,848.50 level, breaking above the bearish trend line as well, to give us a confirmation of a bullish momentum. And if we are lucky enough, we start seeing some liquidity around this area, which will be reflected on the chart as buy pressure above the 1848, will definitely be another opportunity for us to add more position to our existing trade. So these are my views here on the XAUUSD for today. I hope you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. And if you have any questions regarding what I've just explained so far, feel free to drop your inquiries in the comment section.